Every year I make predictions. It's been difficult this past couple years because we got hit with the ultimate black swan event called COVID. Last year, I said predicting and forecasting GDP would be futile, but it would have a high degree of volatility quarter to quarter, and GDP growth would be positive for the year 2021, depending on the size, structure of the monetary and fiscal stimulus. Well, GDP was positive. It was actually better than I would have expected. Came in at 6.3% in Q1, 6.7% in Q2. Slowed down a lot in Q3 to only 2%. Now, part of that is probably because of the Delta spike, but there's other factors that played into it as well. Why did GDP do better? Because, man, we shoved a lot of money into the system, both from a federal spending standpoint as well as from a monetary standpoint. The Federal Reserve, after injecting $3 trillion into the capital markets, injected a whole nother $1 trillion this past year. Second prediction, I said after experiencing a partial V-shaped recovery in 2020, where it would go from here would depend on who won the presidential election and the policies he or she enacted. Well, President Biden won. He aligned himself with the progressive wings. They immediately spent another $1.9 trillion after we had just done another big package, I'll get into that later, and has continued to push for additional fiscal stimulus through an infrastructure plan and Build Back Better Act. I said predicting unemployment would continue to decline, albeit at a slower pace, but it would remain high as larger corporations instituted layoffs aimed at white-collar jobs. Blue-collar and lower-income employment numbers would continue to improve. Well, there wasn't a lot of layoffs with white-collar, so I was wrong on that. Blue-collar labor boomed back as restaurants started opening back up, hotels, recreational facilities, the whole travel and leisure and retail started reopening. So unemployment has fallen to 4.8%. I'll get into that. Significantly down, but still above pre-COVID levels. Okay, on rates in the equity markets, predicted that the 10-year Treasury would have volatility between 0.6 and a 1.2 yield, with short-term rates anchored at 0. If the massive stimulus bill passed and inflation spiked, the 10-year could rise to 2%. That's pretty good on it. Short rates stayed anchored at 0. The Fed was very clear on that, so it was an easy prediction to make. The 10-year Treasury fluctuated between 1% and 1.75%, and then reversed, or peaked out at 1.75, and then reversed back down to 1.2 in August, and is now at 1.61. Who knows what it is this morning, but that's where it was yesterday. Equity markets would incorporate too many variables to predict the direction of valuations, but predicted that volatility would remain high. You know what? There wasn't much volatility. It was a one-way grind straight up because the Fed kept injecting liquidity and the federal government kept spending money. The equity markets just kept rising. Predicted certain goods and services may show some deflation, but the Federal Reserve's massive expansion of the money supply, asset prices, and commodity prices would inflate. We'll be getting into that very shortly, and that's exactly what happened. Real estate values would depend on the demand and cost of availability of financing. Well, rates have remained 0. Long rates have been exceptionally low, and banks have been more than willing to lend on real estate. So real estate values have continued to lift. And lastly, demographic shifts out of high-cost, high-tax states would only accelerate. We have had the biggest demographic moves that we've ever seen in our country in such a compressed period of time. For those clients of ours in Utah or Boise or Arizona, you know what has unfolded. People have been flooding into those markets, and a lot of them coming from this state of California. All right, I can't start this without addressing COVID. I'm not going to spend a lot of time on COVID. I'm going to make it quick because so much discussion about COVID, and I look forward to where we don't really spend any time talking about it. But let's just kind of take a look at where we are. Okay, so the dark line is the daily tests. We maxed out at testing almost 2 million people a day. Daily cases right now are at 71,000. I think we peaked out somewhere 200,000 with daily cases. I can't remember the exact number. More importantly, hospital occupancy and COVID deaths. At our worst, we peaked out around 4,000 daily deaths. Right now, we're at 1,150. And hospitalizations were at 42,000. So we've had this big roller coaster, and that big secondary spike was Delta. Same dynamic has played out in Europe, wherever Delta has been. You get this big ramp up and spike, it crests, and then it rolls back over. Folks, I think what we've done is we have now moved out of a pandemic to an endemic. What do I mean by that? COVID's going to be with us. That's just the reality of it. It's not going to go away. Vaccines, we now know their effectiveness really lasts for about 20 weeks meaningfully. Sure, they have an impact on the repercussions if you get COVID and the degree of symptoms, but to think that COVID's going to go away, it's not. It's a coronavirus. The cold is a coronavirus. I think we're going to have to come to live with it. Fortunately, with most viruses, the more it passes from person to person, the less deadly it becomes. And I think that's the world we're going to be living in. These are the last things I'll address on COVID. The lines, a series of lines, are vaccination rates by different age groups, 75 plus, 65 to 74, and all the way on down. Obviously, the older cohorts have the highest rate of vaccination. The younger don't. The survival rates, which are very important, because remember, when COVID first came, we were very concerned that the death rate could be very high. But then as we started learning more and more, we realized that the death rate was much lower than what was initially feared. And COVID's a weird dynamic. It really does not have much of any effect on younger people. The normal flu will always kill a couple thousand, 2,000, 3,000 infants every year. COVID, I think, worldwide has killed 540 children and young children, and if I'm correct, they think most of those had other serious health issues, so it's even hard to tie it to COVID. And the reason is because young children operate off of their innate immune system. You're born with an innate immune system. And their innate immune system just takes COVID and kicks it right out. In fact, a lot of times they don't even develop antibodies to COVID. Where we, as we age, we develop a complex immune system. And our complex immune system comes from dealing with bacteria, viruses, and all the rest. And because this is a novel virus, us who are older have never had that introduced to have our immune system know how to process and deal with it. So for the younger generation, they're operating off their innate immune system, and it just doesn't have a big impact. Now, the interesting thing that will come is we've already had big issues over forced vaccinations in this country. If you think that's bad, if the government starts in trying to forcing kids to be forced vaccination, I think we're going to have a lot more political strife around that issue. Because it's one thing to be told you have to be vaccinated, it's another thing to tell you that you have to vaccinate your child. And if you're worried about your child from the vaccine, because there are issues for younger people, myocarditis and pericarditis, they know that. And in fact, the Moderna vaccine has been now limited or banned in several European countries because of the risk of that. So that's a quick summary on COVID. Let's hope it just all kind of fades away over time. But as I said, I think it's moved from a pandemic to an endemic, and we're going to have to just be living with it. But fortunately, at a lot lesser impact to all of us and to our country.